Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, April 25th. I want to take just a few minutes just to discuss what markets did last week as we continue to have a market sell-off last week with the S&P 500 finishing the week down 2.59%. The mid-cap index as measured by the S&P 400 was down 2.14%. And the small cap index as measured by the S&P 600 was down not as bad, but it was down 1.2% on the week, but it is negative year to date. The small caps are as interest rates creeped up off of the higher than expected CPI report for the month of March that we got last week. And as we moved into this week, we started to get a little bit of recovery Monday, Tuesday, and Wednesday off of earnings, and very good earnings that we've seen so far this quarter so far. However, as we got to last night, we had a few big name tech companies miss on revenue, and it's really sent the markets tumbling today and giving back a lot of what we've gained so far week to date in the equity markets, specifically on the Dow alone. It's given back most of its gains for the week. However, earnings season is a little messy as we go through it. It's never, in the markets, nothing's ever a straight line. The other thing that kind of spooked markets this morning is we did get our first look at first quarter GDP, and it was up 1.6% versus expectations up 2.4%. This is our first look. It's revised 3 times, but it caused, again, interest rates to spike, and you're seeing your small and mid-sized companies sell off as the rates tick up. Remember, small and mid-sized companies are going to be hurt more by higher interest rates because they have to rely on bank lending, which is tied to these interest rates going up and down. They're not able to go out into the markets themselves and do their own corporate debt structures and bond out like the large companies are. So they're more interest rate sensitive, and that's why you're seeing the pressure there. But as the old adage goes, as the rain falls on the market in the month of April, it should lead to May flowers, as April showers tend to do that, as the old weather adage goes. For the spring, we don't foresee anything major going on here, and it may just be that expectations were just a little too high for some of these companies because they're still growing, earnings are still growing. It's just an expense management. One's buying a company and the other one is reinvesting a lot into AI, which is what you would want them to do. So you are seeing opportunities now in the market when earnings are coming or guidance is a little light, where companies are being sold off pretty significantly hard. You saw Meta today down at its worst, down 15% off its earnings. Its earnings slightly missed on revenue, but on the bottom line, they beat. And they beat significantly. But what we would like to impress is that we do not see this spiraling out to anything larger than what this is a little bit of volatility as we're going through earnings season. Remember, we're just 3 weeks into earnings season. We have a long way to go with a lot of companies still left to report. So we believe the fundamentals are still going to remain good. The underlying economy still remains strong. It's just we want to make sure that the Fed does not do anything unnecessarily to send us down. It's a little why you're seeing such a significant sell-off today in the equity markets too. Has a lot to do with stagflation, is the popular term that you're going to start hearing, is slowing growth and rising inflation. And tomorrow morning, we are going to get the Fed's favorite measure of inflation, which is core PCE for the month of March. So that's really going to be a good indicator. Is inflation really reaccelerating or not? Expectation is for it to be down 0.2 month over month at 2.6%. Remember, the Fed funds rate right now is at 5.5%. Very, very restrictive territory. So if you have questions again about how to navigate this time, what's going on with the Fed, when are they going to cut, what's it going to mean for you, call us. We'd love the opportunity to speak to you. You can reach us at 904-346-3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.